Good evening. Today I'll be talking about some important taxation law questions. Taxation law questions part 2. Define salary. Explain income from the salary. Salary is a fixed amount of money agreed every year as pay for an employee, usually paid directly to his or her bank account every month. Income from salary is the earning that a person receives from his employment. The income is usually fixed amount paid monthly because of employee contract. This is basis of an individual's financial stability and is subject to deductions and taxes as per law. Income from salary is not limited to the monthly pay received by the employees. It includes several components and each adds to the financial earnings. Salary income includes increments as well. All these components are structured according to the company's policies and the job roles. Components of salary are basic salary. The basic salary forms the core of the salary structure. It forms a significant part of the entire salary. House rent allowance. A house rent allowance is usually provides for employee who live in rented places. House rent the short form of house rent allowance is HRA. Leave travel allowance. LTA or leave travel allowance is an allowance on their companies provide for travel expenses. Bonus. A bonus refers to employees' payment that are provided to employees. These amounts are usually taxable and can vary based on frequency and amount. DNS allowance. A DNS allowance or DA is given to employees to manage the impact of inflation in their life. Conveyance allowance. A conveyance allowance or CA is given to employees to cover basic travel expenses from home to the work. Part B. Define the following terms under income tax. Deemed to be let out house property. It refers to the property that is not self-occupied by the owner and is not let out on rent. Instead, for taxation purpose, it is considered deemed to be let out on rent. This categorization impacts the calculation of income tax, making it essential to know the rules and implications associated with properties. Self-owned house property. A self-owned house property is residential property issued by the owner or their families for living purposes. This property is not rented out at any point during the financial year. The term is significantly significant when it comes to taxation and financial planning, as it affects the deductions and exceptions homeowners can claim. Any home where the owner resides is termed as self-occupied property. For example, an owner buys a house, so that is his own self-owned property. Part 3. Short notes. Places of supply. A place of supply is where goods are delivered. The place of supply of goods and services is the place of supply of goods, that is, a place where the ownership of the goods changes. What if there are no movement of goods? In such a case, the place of supply is the location of the goods at the time of the delivery of the recipients. Financial year. A financial year is a period of 12 months used by the government, business, and other organizations in order to calculate their budget. Whatever budget they make is based on the financial year. Financial year is often used by businesses to compare with the calendar year. The financial year usually starts from 1st April to 31st March of the financial year. In the financial year, when the financial year ends, they have to pay their income tax. And they have to close their books on 31st March and open new books on 1st of April. UIN holders under GST. UIN is a GST exempt for specific purposes such as foreign diplomatic missions, and embassies. They don't carry any outward transactions and thus are certified to take refunds of the tax paid on the inward supplies. It is usually used to reclaim GST refunds. So therefore, whoever foreign diplomatic missions used to buy anything, they don't pay tax, and they get tax refunds on that. Thank you and good night.